there, good morning. This is October 25th today, Pacific time, 10:25. Stock market is at near 3,900 and everybody is thinking it's a range bound. It's going towards 4,300 and then 4,200 maybe, but the first stop would be 3,950 and then it's going to get resistance, and for year end it's going to go past 4,000. So that's where it's headed. I think the technicians have been mostly right during this bear market. Bear market is very technical driven, so I agree that that's what is headed, but you always have an element of surprise. So today the sentiment is so good, and in the past when it happened we had some down days right after. So I'm thinking that Microsoft is going to have a bad earning, Google maybe not so good, could be worse, and that will bring down the whole stock market again tomorrow. Then a lot of anticipation on Apple earning, and based on that stock market will go down or sort of navigate through this short-term downtrend and again take the trajectory back to 4,000 level. So that's kind of like where I think where it's headed in this season, but I don't think that there is much upside left for any of these mega cap stocks. I might be wrong, but unless there's a short covering, I mean that already, a lot of that already happened. I don't see that what's the upside until the January earning comes in, right? Because everybody understands that the rates takes a while to bake in within the system, and everybody has gone through the pain through the year to buy the dip and then getting hurt. So I don't think people are going to jump in to buy the stocks right away. The traders will, and that's why it's very range bound. It's very much technical driven. So yeah, I mean I'm holding stocks for Meta at this point and AMD. Both were a lot of pain to hold those to both these stocks because of the downside. I bought Meta around, or rather I sold put and got assigned at with a cost basis of 148, and since then I'm holding. I've been selling calls, so my average came down to close to 140. Right now Meta is around 136, so I'm okay to take the loss, but I'm just don't want to also miss out the huge upside if there is any element of surprise in Meta's earning. In that case, so that's why I'm kind of half short, half long. So I have 50% of my position on the Meta is now short, and around 50% is still long. My strategy is if Meta goes really down tomorrow around 115, I think is where it should bottom, and in the worst case maybe around 100, then I will buy on Friday more, double down my long positions. So I would certainly hope that there will be an upside soon, after it drops around 100 or whatever the new gap established after the earning. In case it goes up, then I will lose half my position because of this. Half of the short positions I have, I think around 80% is actually short position, and so 800 stocks I have around short and 300 stocks long. So those 300 stocks I still have some level of profit. So that's Meta. For AMD, I think it's actually bouncing now. It's going to go up. So I have some short, and I have an upside. Around $65 is my average. I already closed 50% of my stock. I had $63 average. I closed a lot of those low cost basis stocks today, 50% of those. So now my average is around 65.3. I have a upside. I've sold called for those positions at 65, and I shorted around 300 stocks today just for trading, and I know around 60 61.25, and I think the stock trading around the same range. So I would like to close the position. I think the stock would revisit before the close today, as the market will be a little nervous just before the close, before the Alphabet earnings. So the stock will sell off a little bit before the close. So I will take the profit on the AMD. I think AMD will be idiosyncratic to what happens in tomorrow's earning or today's earning. So AMD will bounce back, as it has bottom at 55. So I will buy back around $60, and I'm expecting that AMD to bounce back again before the earning next week. So those two positions, and then I also close some of with some profits. My Goldman Sachs put I sold at 290 after the earnings, so I got some profit, but I still have the sold call at 340. I'm holding that one. I closed the JPM put I sold on Monday with a strike at 126. I took about 20% profit on that one. Today, when the stock was around 122, I sold. I took profit also in the Sunrun stock, just a little bit, just broke even. Not so much of a profit on that one, but I'm happy that didn't make a loss. I also sold put today. For actually, Pfizer is the one of the stocks that I bought yesterday, rather sold put and bought calls. Those are like a little bit underwater. So, but I think that those expiry dates are November 28, so we have some time to close those. So I think overall, I mean, my portfolio as of today, believe it or not, is around 2% up year to date, and it was at some point 25% up, but because of the Meta and AMD, and okay, by the way, I sold KOA with a huge loss yesterday. I took around almost 40% loss on that stock, on that KOA China stock. That was a loss harvesting. So all the stocks I sold earlier in the year in January. It's not a big deal. So I guess that I didn't, obviously I would take profit any day over tax loss harvesting, but I thought that was there is no hope for this K-Wave China stocks at this point, and I was holding it for a bounce for a while, but now I have no intention to hold it any longer, so I close all the positions. So that's one. So, and that lightened up my overall margin, and I'm happy that at least I'm neutral or slightly positive for the year in this in this really tough year. So the worst case for me at this point is that Meta goes down to 100, and I will lose around 5% of my portfolio on that. And if that happens, then I will buy back Meta at that strike price, or maybe I'll sell put at the same strike price and get it assigned. So that would be my strategy for Meta. And for AMD, I mean, I already closed my. I guess I have some short positions that will hedge a little bit of the AMD downfall, but I intend to close those short positions with a very short time period, within the next couple of dollars. And I'm actually a little bit nervous about upside risk for the AMD, because it can jump very well. I mean, if it crosses 62, I think a lot of short covering will happen and it will jump back to 65 in no time. In that case, I will be left with those shorts. So I'll need to close this short position as soon as possible. Yeah, so that's pretty much like, right now my portfolio positions are, let's see if I missed something. Yeah, I also have the SPY long, I have a sold SPY calls at 42.60. I have an SPY put that's expiring in January. SPY sold puts at 3,000 for February expiry and March expiry. February put bought at 3,200, expecting that there will be, after the January earning, there will be a huge downturn, right? So that's basically I'm waiting on, but I think I may have to roll up because right now seems pretty distant that we're going to go to 3,200. I mean, the whole equation changed when the unemployment rate, even though after all this tightening, came up as 3.5%, right? It reduced further. So now the market is convinced that it's impossible to have a very deep recession. That's why the bank stocks are surging after last week's earning, and that's why I think there is a potential if the Alphabet and the the Microsoft earnings are really good, then banks will really really go ballistic from here. So it's probably going to go to a JPM to 140, close to 130, and that would be a problem for me. So I wanted to cover the short positions for the JPM today before the call. So anything can happen tomorrow. I think it's risk is on the downside. I think it's really tomorrow, this week's setup will be established after today's call. If Alphabet earning is bad, the Facebook will be totally slammed tomorrow. If Alphabet is good, then Facebook probably going to 140 plus, and then it will decide tomorrow after earning whether it goes back to 130 or 115, or whether it's kicks off and for the next bull run. I think Facebook has bottomed, but you never know. The sentiment is so bad. If there's a buyer strike on Facebook so far, but if the Mark Zuckerberg says tomorrow that wow, if Mark Zuckerberg tomorrow comes up and says that, hey, we are going to make these changes and to go head on with TikTok, market will really like that because they know that what MZ can do. So I think it's going to be a very interesting earning call tomorrow. So I freed up my calendar to listen to that call. Well, one more thing before we go. As you know, the British Prime Minister is now an Indian descendant. So that kept me kind of wondering. I mean, this is not. It's kind of a cliche, right? That we have so many Indian CEOs and the leaders at the top companies, and now a Prime Minister who is from the Indian origin. Obviously, there is a lot of things on play here. I mean, he has a lot of connection. He has a billionaire wife. He has that definitely played a part. I cannot imagine that he will pull through this plug of becoming the Prime Minister of the UK without having a lot of strings to pull, right? And I guess that's the bottom line. But overall, the point is that why there are so many Indians in this. It's not a coincidence, obviously, that we have so many of those instances happening in the last few years. Google, Microsoft, you have FedEx, you have Adobe, you have just name it, all the companies, IBM, Pepsi, and so on and so forth, right? So we have all the CEOs in a very strong positions as Indians, and now we have the Prime Minister as well. Obviously, he is not an Indian born. He is he's from his parents or his grandparents migrated from India, and parents were born and brought up in US. I guess, I mean, I don't know if they're born, but they're brought up in US, and so was he. But I think there is something special about this generation. So if you look at this age group of these CEOs, they're kind of raised in the 80s and 90s, and they went to school around that time. And when the democracy of the India, that's very unique, and that's very much fosters, I would say, with the right education and with the right kind of balanced approach towards success and failure. I think it's coming handy in this generation, and it is something that is to be proud of, but also something to look backward and look at, why analyze that, why this particular generation, what kind of bring up, how actually these folks in this generation were nurtured by their parents, and what kind of balance, in a balanced environment they were raised, right? compared to, for example, the previous generations of the CEOs in these companies, or in general, like let's say, for example, compared to Chinese, obviously language is a big part of it, like English speaking, but is that all, or there's something more to it? Some food for thought, right? And that's something that the next generation should keep in mind, that leadership is always is about bringing consensus as much as is about visionary. So yes, these guys, I think what stands out, in a lot of this, I have, in my company, Sundar Pichai is the CEO, and I can see the strength that he has. Of course, he is a product manager, he is a visionary, but that's not his main strength. His strength is also about bringing consensus. And if you look at someone like in Microsoft, Satya Nadella, I think you'll see the same traits in him as well as if you look at other companies where there are obviously head down execution is one of the key elements, but also like not taking an extreme approach or a balanced approach. And that, I think, comes a lot from the upbringing, that good or bad, just don't get too carried away, right? That's actually, I think there's one of the Indian lessons around that timeline, when people grew up in 90s, and that lesson is coming out to this US corporates these days today, as well as you can see that leadership skill is also being appreciated in the political world too. So yeah, this is a good lesson. I think that's what I'm going to bring in as well in today's video. But yeah, what's the stock market? And I think it's going to be a very interesting week. I think market wants to go up, but there's a 39.15 where there's a huge resistance, and let's see if we can get there before the Apple earning, or even before the Apple earning, that the balloon bursts and we head downwards. Either way, as I mentioned in the previous video, the keyword is hedge.